as in flush with cash, because you need to earn a minimum $75 million a year just to make the cut here.
Wow.
Okay, Michelle's impressed.
Lot of money.
Michelle's impressed. Two of the best are with us today. Welcome, Stephen Schoenfeld, whose proprietary trading empire and stable of hedge funds earned him nearly nine-figure paycheck last year, if you're to believe Trader Monthly. But we won't ask him exactly how much it was.
Why not?
And John Burbank is with Passport Capital, a $4 billion global commodities fund with a 200% return in 07, enough to earn him a $300 million paycheck last year. Good to see both. I know.
Good to see you. Nice to see you, too.
Stephen, you're of the two, between you and John, you're the shorter-term trader in this group. Does this market right now make sense to you?
Yes. On a short-term basis, you just go with the trend, go with the flow, and every market makes sense in some way to us.
Right. I mean, so for you, you're not trying to read the fundamentals, what the message of the market is and all that. You're just following the trends right now.
All technical. Actually, to have a view for weeks and months would be a negative thing for a trader.
But, John, that's what you do. And let me ask you how difficult that may be right now. For example, oil. A lot of people feel if the economy is slowing down, you'll see demand slow down, the price has to come down, but yet you get a day like today when oil does go to a new high at 111 change. How do you trade this market a little longer term?
You do your best to stay in the trade, which is a very underrated thing when you're a longer-term investor. And the demand is not slowing down in China. You also have a lot of flows going into physical commodities and not necessarily equities.
Stephen, didn't you make a lot of money betting on subprime going down? Are you still making that bet? Are you still making that trade?
No, that's not our game. Our game is trading what's tradable. It's been energies, metals, tech, and financials. And whether we're long or short, we're unbiased.
Right, because subprime isn't tradable right now, I guess, is the whole idea.
They're starting to feel that they can start making a market in any of that right now. Let me ask.
I think we're the guys who are in the subprime trade.
And what does it look like right now?
Well, it looks like a zero, is what it looks like.
So do you anticipate them being able to make a market in that some point again?
You know, perhaps the AAA, the AAA subprime securities have a chance with massive intervention, but certainly the mezzanine tranches really have very little chance.
So does that mean you're short, or you're just not in it at all?
No, we're still short. You know, we're still marked at a high enough level by our dealers that we have a lot more to make to get to zero.
We asked you both if you'd give us some sense of what you'd be trading right now, and Stephen, you would go long Apple and short Google right now. Why?
Well, actually, I have to preface it. Most of your speakers are talking about weeks or months.
Yep.
That's my pick for the remainder of the day, so that's till 4 o'clock.
Isn't that fascinating?
Right.
That is so insightful.
And Apple is down, so I presume you put that on this morning before this. But
well, I'm talking about now going forward for the rest of the day. Apple has been acting great, one of the best acting stocks over weeks. Today it was down 20, 30 cents early in the morning, and now it's down a couple of dollars after the later afternoon sell-off, but still acting good relative to the other tech names like Google, Baidu, and RIM, and has good volume versus its average, which is part of our game.
Do you keep any trades overnight, or you're in cash by the end of the day?
We do about 40% of our trading overnight as well.
Okay. John, you like the ETF on gold, GLD, and you like the drillers right now, but I assume you wouldn't be getting out of those positions by the close today.
No. No. In fact, we really try to look sort of 6 to 18 months forward and understand what fundamentally is likely to happen. It's really guys like Phil which makes our job much harder intraday with the swings. For the most part, we like commodities. We don't like U.S. financials. And as a way of expressing our bet on energy, we prefer large cap drillers who have tremendous leverage, earnings leverage, to greater exploration offshore. And in terms of GLD, there are many gold stocks that one can own. Right now, we have the phenomenon of underlying physical commodities rising and equities falling. So GLD will do even better in a more of a crisis in the stock market.
Stephen, how much of your success is being lucky and how much of it is being smart?
Very quickly.
I actually have a great team of people. I have 400 prop traders, in-house black box strategists, and a team of stat arb guys. So it's more about them.
Come on, you know what I'm asking.
It's more about their skills.
And he's humble too. How about that?